Hey everyone, welcome to episode 4 of the Miami Tech Pod. I'm Cesar Fernandez, and I'm joined by my co-hosts Brian Breslin and Maria Durchi. Will Weinrob is not with us this episode, but he'll be with us on episode 5, so don't worry about that. And we have a special guest on the pod today. We have Auston Bunsen, the co-founder of Quiknode, SuperConf, and an investor, huge advocate for Miami Tech. Auston, welcome to Miami Tech Pod.
Thank you. How's it going?
Everything's good. We have a lot of exciting stuff to talk about. But first, any reflections on the week? We have a new president, a lot of changes happening in our city, in our community.
I mean, I'm super excited about these tunnels that Elon is building us for free around town, right? I didn't see a price tag, so I assume it was free. It was just for the likes.
Yeah, I'm sure he can pay for it with 1% of the increase that he's made in Tesla's astronomical stock price this year or the last 12 months. But I'd love to maybe get an engineer on the pod and discuss whether tunnels work in a city built on porous limestone. I don't know.
It's a good question.
So look, let's jump right in. Auston, you've been extremely active in tech, in blockchain. You've been an investor. Can you give us, our listeners a little bit about your background and your journey in the world of blockchain and crypto?
Yeah, for sure. Let's talk about how I got into tech.
Sure.
So this is a story that I like telling because people seem to like it. It starts with a girl that I met on MySpace. That's the old
throwback.
Yes.
MySpace.
Exactly. And so I met her and we started dating in real life. And her father, he was like, listen, you seem pretty smart, but you're not that ambitious. You should learn how to write software, move to Germany. I'll let you learn how to write software. And then once you know enough, you can, do a job for me and you'll have a job as an engineer. And at that point in my life, I had dropped out of Broward Community College after going to orientation and realizing that I was going to lose a bunch of time and money doing something I wasn't sure I wanted to do. And I had invested a little bit of my own money that I had earned working at a call center or whatever random places I was working back then into building a online t-shirt store for t-shirts. I had paid roughly 2 months of my earnings to a kid that whipped it up in about a weekend. And I was like, okay, this seems like something I should put some effort into. So I moved to Germany and I lived in this guy's basement while I learned how to write software. And then he gave me a role working on some random project, which was they were shipping 3D AutoCAD files over the Atlantic Ocean as a way to collaborate. And so, a file server is a little bit more efficient than putting a DVD on a plane to cross an ocean. So that's actually how I got into tech.
So wait, this guy in Germany was your MySpace girlfriend's dad?
Yes. Yeah.
And your MySpace girlfriend was in Germany?
Well, when we started dating, she was here in Florida in real life.
Okay.
Was she on your top 8?
She was, of course. Yeah.
Remember the top 8, guys? That was there was a lot of politics around, who got on your top 8.
A lot of drama.
A lot of drama.
Yeah.
Sorry, Auston. Go ahead.
No. I actually picked up quite a few CSS skills from using MySpace.
What do you think Tom's doing right now?
Rich.
I know what he's doing.
What's he doing, Auston?
He travels the world and shoots photos. That's his life now. You should check out his Instagram. It's pretty fire.
Okay, we derailed the Auston Bunsen intro, but go for it.
Yeah, and so I did that, and then it became October in Germany, which is way too cold for me. As you can tell, I'm wearing a Patagonia jacket inside in Miami. So it was way too cold, and I left. I peaced out. I came back. I got a job working as a software engineer by tricking somebody into hiring me. I like to tell people I played a game every day called Don't Get Fired. And I just did that until it wasn't really a game anymore, and it was like really easy to do my job. I started getting involved in the community. That's actually sort of how I met Brian. I worked at this company called Rush My Passport, and we needed to hire like a designer to help with some stuff. So I used Google, and I called him. I bet Brian doesn't even remember this, but I called him and I was like, hey man, we like need to hire somebody to like do the design, and like, can you do this? And yeah,
I remember not getting hired for that job.
Yes, yeah, we did not end up hiring Brian,
No.
but
Brian was not on the MySpace top 8.
Definitely not.
Nope, not for that company.
But no hard feelings. You stayed friends.
Yeah. After that, I sort of started like investigating what was going on. Like, Brian's running this thing called Refresh. I should like go to it. Like, what's going on there? And at that point, I was living in Broward. I was taking the Tri-Rail up to Palm Beach to work. And so I was like, Miami feels a little bit closer. And then going, like, the vibe was way, way better, cooler, different, whatever you want to call it.
What year was this?
2009, 2010, somewhere around there. Right around that time, the Future of Web Apps was also here. And Future of Web Apps was like a phenomenal conference for me back then. Like, there's people from TechCrunch there, like there's people from Google, like the people that built this company called 280 North and invented a programming language were there. And there was a unconference that was happening before Future of Web Apps called Barcamp, which was organized, I think, by Brian and this other guy named Alex DiCarvalho.
Yeah, Alex was the one who was spearheading that. That was his like brainchild. But yeah, we did that a couple of years. Yeah.
Yes, and that was like by far the coolest. That was way cooler than the conference, because at Barcamp, you're like 5 feet away from the speaker and you can ask whatever question you want. And so, yeah, that was awesome.
So then how did that, Auston, how did all that lead to you starting SuperConf?
Oh, yeah. So Future Web Apps was here for 2 years. I loved that. And then they left. It was like 2010. Yeah, it was 2010 when they announced, oh, we're peacing out, we're going to Vegas, blah, blah, blah. And I was like, how am I going to meet more tech people? I like these people. They're smart. They're like nice. They're helpful. I want to keep having that in my life. And so at that point, I had not been working, at the same company anymore. I actually left a different company where they had made me the CTO, and I had like a nice chunk of money from that. I was like, let me invest this into starting a conference, and it's going to be amazing. And so I did that, and I definitely invested it. I lost like $15,000 that year of my own money. And but it was great. The conference was actually really awesome. It was like a mix of Barcamp and Future Web Apps together. We had sort of like the sort of high profile type speakers you would have at Future Web Apps, but also the sort of intimacy that you would have with Barcamp. And I thought that was amazing. I think, I helped actually a friend of mine now, and David, and Brian and Maria, and probably you, Cesar, David Small, he ended up getting a job at a local startup called .co. Because of him attending SuperConf, other people got jobs. The companies launched there have gone on to get acquired by like Amazon, Facebook, et cetera, et cetera. It's pretty cool.
Yeah, what was it you were telling me that like if you had just put money into every single one of the companies that had presented at SuperConf, you would have beat basically every single major VC firm in returns or something like that?
I don't think we would have beat the top tier VC firms because their multiples on funds can be high. But I think we would in aggregate. I think it would have probably been like something like 5x up. And if you narrowed it down, it gets even better. Like if you just like throw out like the companies that were like, if you just look at like the top 10 companies that launched at SuperConf, it would have been like 10x, 15x, something like that.
So Auston, you've been extremely active in the world of blockchain and cryptocurrency. Can you tell us a bit of that? What you're building at Quiknode, and tell our listeners a little bit about the company.
For sure, yeah. The way that I got into blockchain was sort of interesting. It's actually multiple steps and very slow. So the first one was, there's this guy named Michael Greenberg who lives up in Broward. And he used to run a meetup for nerds. It was called Hack and Tell. And so the premise is simple. You hack something, you build something, and then you show it off to your friends there. And so I had presented at one, and then he did one. And at his, he like takes out this janky old computer, he puts it on, and he's like, "This is my Bitcoin mining rig." And he's like, "This is really cool. It's really awesome. You like can like mine these digital gold coins." And I was sitting there. I think Brian might have been there. I don't know if he was. I was like, "This is a scam. Let's move on."
I was looking through my emails, Auston, and I found an email from Mike Greenberg to all of us saying, "Hey, Bitcoin's $6. You should all buy." And then I think my response was, "How?" And like no one gave me a clear answer, and so I never did. And that's why I'm not a trillionaire.
Yeah, you guys are not on Michael's top 8, and he probably has an island somewhere that he owns, right? I mean, what's his story now?
Michael actually is still working in crypto. He's working on very cutting edge stuff now. I actually connected him with one of the people that works for Andreessen Horowitz Crypto, who also is here in Miami.
Got it. So, again, we derailed a bit, but you hear about this odd thing called Bitcoin back then, and what was your reaction?
I completely disregarded it, and it didn't really come up again until so sort of between that time and another, fast forward, I became the CTO of a company called onesaleaday.com, and I left that company to try to like take some time off. And during that time, I moved in with some roommates, and one of my roommates invited one of his friends to just sleep on my couch. And that person ended up being the CTO of what is now a pretty successful company called Bitstop. And he loved Bitcoin. He would like buy pizza with Bitcoin. He would like buy anything and everything he could with Bitcoin. And he was very, very deep into it. So just sort of by proxy, I started like figuring out like what's going on, whatever. And then I moved out, and he bought my TV for 2.5 Bitcoin.
Amazing.
So you had $100,000 TV, basically.
Yes, which I bought for $900 from the CEO of onesale.com.
That's an amazing Miami tech story. Do you still have that 2.5 Bitcoin, or did you like liquidate it throughout the your journey?
I do not have the 2.5 Bitcoin anymore. I liquidated that whenever it went up. Like whenever he bought it, it was like 200 a Bitcoin, and I sold it at like 500. I was like, I'm such a genius. I'm so up on this. And that was the end of that. And then in 2017, one of my childhood friends, he sent me this like brief that he wrote, and he was like, Ethereum is like the newest, most innovative thing to ever come out in the entire world. And I started digging in, and then the price of everything started going up in late 2017. And I ended up starting a company with 2 of my coworkers from the place where I was working, which was Wincode. And that was pretty cool. Like we got in Forbes, we were like in Business Insider and a bunch of other stuff. Like in our first like 45 days, we made like $45,000.
What was the name of the company?
C Blocks. And the premise was you give us like 125 to like $500 or something, and we'll buy 5 random cryptocurrencies and put them on this like little USB that you have, and it's there, it's secure, you never have to worry about anything. And yeah, it was pretty wild.
I wonder what percentage of the people who bought those C Blocks thumb drives like have lost them, or like never liquidated any of them, and they're just sitting in a drawer in someone's house.
Yeah, I mean, I actually get text messages because some of the like very first people to buy them were just like my friends.
Mm-hmm.
And I get text messages like, I'm up 200%. I just checked my C block. And for the most part, I was like, this is going to be crazy. I don't know that these are going to be worth anything. We're just buying random crap from the top 100. But apparently, it's happening. Like it's worth something.
And is the company still active?
No, that company ended up pivoting and some other stuff. But yeah, actually, that's a good segue. So we pivoted away from that because we got locked out of payment gateways because we were a crypto company, and so we decided to build a wallet. So it was just us three, and we literally sprinted for like 30 days to build out a Litecoin, Bitcoin, and Ethereum wallet and ship it. We literally built a wallet from the ground up in 30 days, and that was pretty epic. And so we tried with that. We ended up raising a little bit of money on that idea from Jason Portnoy, who was one of the early PayPal co-founders, and not co-founders, but employees. And he was the CFO at Palantir, the most evil company in the world. Shout out my boy Peter Thiel.
That
anyway,
was Pop, right?
Yeah, that was Pop. That's what it was called. And right. So we had like really great metrics at the beginning of our funnel there, but we couldn't make everything work past people using the app one time. Essentially, it turns out speculative assets are not good mediums for transferring value between people that want to transact. So we pivoted again. We came up with like 5 random ideas, and this is actually not a pivot. We just changed the business completely. I don't want to like change. I don't want to sugarcoat that.
It's amazing what could be called a pivot these days, right?
Yeah. So this was not that. We ended up we tried like a few different ideas, but the one that caught on was we started to deliver vape, like vape pens.
Yeah.
To people from the smoke shops. Like we just went to the smoke shops. We like spent $100 on like some random postcard. We dropped them at the vape shops, and orders started coming in. And at that point, we still had the wallet running, and it was sort of like a point of contention between the co-founders. Like, are we a business that delivers vape, because that's making like $2,500 a month right now? Or are we a business that runs a crypto wallet, because that's making $0 a month, but it's what we set out to do in the beginning. In the end, we ended up becoming a vape delivery business. And at that point, me and my co-founder sort of like didn't see eye to eye. So I ended up stepping away.
Is that vape delivery business still around?
Yes, I think it's called like, I think it might still be called Pop.
Okay.
But yeah, the last I heard, they're doing really well. They've been able to grow that quite a bit.
Cool. And so then, what inspired you to like, after all these different crypto journeys and all that stuff, what inspired you to start Quicknode? Like, what was the itch that you were trying to solve, or the problem, like the glaring hole in the market that made you decide, all right, I'm going to start this super complex, technologically startup?
Yeah, so let's start with a fact. I did not start Quiknode.
Okay.
my co-founders Dima and Alex had started it previously, and they were trying to recruit me while I was at C Blocks, while I was at doing whatever it was that I was doing. They're like, "Oh, we want you to help us work on this. It'll be great to have you." And you know, I sort of encountered the problem when I was building a wallet of like, how do I get, you know, transactions from the customer's phone onto the blockchain? So I noticed that there was a problem. It was like really hard to figure out how to do that. But you know, we ended up paying some random provider that was like subpar. So after I left Pop, I ended up working at, you know, this company actually for a little bit, and they kept recruiting me, and I decided, okay, I'll work on this on nights and weekends. You know, I've known you guys for so long. We've built other stuff together. I've seen you be successful in that. You know, I respect you. We hang out all the time. And so in June of 2019, I ended up joining, and I just worked on it in my free time. And we ended up, you know, sort of putting our heads together and thinking like, oh, the current product, which back then Quiknode was just pay us some amount of money and we will boot an Ethereum node for you. So we'll take like a virtual private server and we'll install the blockchain on it, and then you're good to go. But after we thought about it, we're like, there's economies of scale here. We should definitely for sure run shared infrastructure for all of our customers, because it'll lower the price for them and allow us to save money at the same time. So we worked towards that. We brought on one of my best friends, Manuel, and me and him built out this like version where it's shared infrastructure, and that ended up, you know, being Quiknode. We launched that in February 2020, and we've grown like 1,100% since then.
So Auston, why would someone want to like run their own Ethereum node? Like, explain that in like fifth grader terms.
Yeah, so I think the best way to explain why someone would want to run their own Ethereum node is to start with like an example, right? So let's just say you're Coinbase, right? So people are buying, you know, this Ethereum or this Bitcoin from you, but how are you getting it from wherever it is to the customer's Bitcoin wallet? Yeah, so the answer is Quiknode, right? Okay. The answer is you have to run a blockchain node. You have to run a Bitcoin node or an Ethereum node, and you need to send the transaction to the chain. And so, you know, if you are Coinbase, if you're BitGo, if you're literally any crypto company, you need to interact with the chain at the base layer to do anything useful. And so it's actually really hard to do that, and that's why we provide that as a service to our customers.
Mm-hmm. Cool. So are there some companies that you guys are hoping to get that you think would definitely benefit from using Quiknode, so we can give you a shout out and hope that they're listeners, and so they learn that, you know, you're waiting on a call from them, so to speak?
I mean, absolutely. You'd be surprised at the amount of people that listen to the pod. I mean, it is off the charts, especially with the gravitational pull that Maria has after all of her NBC interviews. I mean, this is like top notch here. So think
a running joke of my notoriety, which just does not exist.
Yeah, I mean, we love to talk to anyone building on blockchain. So if you're somebody at Nike, I know you guys filed a patent to have authenticity certificates for Nikes on the blockchain. If you're at Breitling, we love to talk to you. DocuSign, hit us up. Like, there's a whole lot being built on blockchain today, and we absolutely want to help everyone build on blockchain.
So Auston, are there any interesting projects in Miami that you think people should know about in the crypto space, or and also what are your thoughts on all this movement in Miami Tech, since you were one of the first people jumping on that hashtag Miami Tech when some of these billionaires and millionaires were flocking to our sunny shores?
Yeah. So companies in Miami that are interesting in blockchain, I definitely want to shout out BitStop. What's good, guys? How are you? We love you. Chainalysis is a company that was started in New York City, but word has it that they're opening a 50-person office in Wynwood. So shout out Chainalysis. Let's see. STO Market, what's good?
Kyle and Herwig's company. Yeah.
Yes. And then I think those are my top three.
Okay.
Oh, there's another one, Securitize, Carlos. Yes. Let's see. And then in terms of what do I think of all the motion, I think it couldn't happen without all the work that has been done by everyone here, right? Like everyone from Alex DC to Maria to you to Cesar, like we have been building the platform, so to speak, that absorbs all of these newcomers for so long, right? And we've been very fortunate to have a lot of interest because Keith and the mayor and whoever else are on Twitter, like honking the horn as loud as they can. And we're just sitting here absorbing every newcomer that comes in and trying to connect them and route them to the right place.
Well, quick plug for Austin's Que Vola series, if you're not familiar. I think it's monthly now.
Yes.
And it's like a roundup of all the chisme and news happening in Miami Tech. So definitely check it out. It's one of my favorite things to read.
Yeah, great job on that.
Tips.
Thank you. We should talk about. I've got some chisme I could share right now if you guys
Let's
want.
do it. Let's hear it. Break the news right here. This airs on Tuesday or Monday.
So, have you guys heard that Eric Schmidt is looking at a house here in Miami?
I will sell him my house if he wants it.
Eric Schmidt could buy your block.
Yes.
He could.
Absolutely.
Wow, no, I had not heard that.
That's a good one.
Another guy from this is all rumors again.
Unconfirmed reports.
That's
Correct.
The best kind.
Correct. So another one is Laszlo Bach. He was the HR person at Google. Heard he's looking here. Let's see. What else is?
I think something that's important with all of these people moving here is that, especially for the investors, there should be a bit of a pledge, right? Like X% of your deal flow should be here locally. Like X% of the dollars that you deploy in every year should be to startups in Miami. I think that is something not just kind of it blends that it straddles kind of that intersection between like somewhat of like philanthropy and lifting up the community here, but also probably some serious returns, right? Because these are companies that, but for the fact that they're not, there's some companies that have some significant products that are very real. They have traction. They're very exitable, but they may not have that direct line and access to capital that they'd have if they were in, Palo Alto or New York City. I mean, that's definitely changing, but it'd be a nice call to the investment community to think through that.
Yeah, honestly, like there is a huge arbitrage play to be had in Miami Tech. Like one of the competitors for Quiknode was acquired for more than $80 million yesterday by Coinbase. So that's a great comp for us. And then there's other companies, I know they're doing like $1 million ARR, and like their valuation is like only 10x that, which is pretty crazy because if you look at like, similar companies, similar growth rate, but in Silicon Valley, they're getting like 100 to 200 million, sort of valuation on their rounds.
I mean, you can also look at Tesla, which is trading at 1,000x earnings.
Right.
So
yeah, so there's definitely a Miami arbitrage play to be had, is what I'm saying.
So, well, Austin, thanks. Stick around. We're going to talk a little bit about some other topics here. And speaking of arbitrage plays and moves that companies are making, Brian, what do you have for us this week?
So the big news this week was that Fort Lauderdale-based Citrix acquired Wrike for $2 billion, which makes it the largest acquisition by a South Florida company in tech ever, I think. I mean, previously there'd been big acquisitions of South Florida companies like Ultimate Software and Chewy and all that. But this is the first time that one of our own is swallowing up another company. And I think this is a big move. It shows that M&A is alive and well down here, and that we can raise the funds and make some big moves on a national level, you know. So I think that's it'll be one of the first of many. Like I can see Chewy and some others acquiring some companies down the line now that their stocks are so so hot. You know, I mean, Chewy's trading at $46 billion valuation now. You know, and they sold for $2 billion less than 2 years ago or something like that. You know, that is some crazy returns. I hope the founders still have some shares. So,
have any of you used Wrike? It's a project management software, right? That's the best way to think about it.
Yeah, like Google Docs. Think of it like Google Docs for enterprise customers. So
neat.
It's not the sexiest stuff, but you know, enterprise software, it might not always be sexy, but it carries a lot of zeros. You know, so
yeah, especially with you know, Salesforce kind of planting the flag a little bit, and you know, with their acquisition of Slack and kind of showing that price tag to the world. I mean, I think it starts lifting up everyone in that enterprise B2B space.
Oh yeah, I think we're gonna see an arms race. This is gonna be a consolidation arms race of who's got the most cash or stock that they can use to acquire enough assets to build sort of lock-in portfolios, so that people aren't jumping from one platform to the next, or so they can take as much of the corporate dollars as they can. You know, since it's not that sexy of a topic. The sexiest part of this topic was the billions being thrown around. I think we should move on to Maria's topic this week, because has more of a Miami flavor, and it's more a startup-y, I'd say.
Awesome. So my topic for this week is Ironhack's Series B raise of 20 million. So for folks, you know, who've been in the ecosystem for a while, you know, Ironhack has been incredible. They've one of the local coding boot camps, although they have multiple locations in Amsterdam, Barcelona, a bunch of other spots. And so it's been exciting to watch them grow over the years, and we couldn't be more excited for the raise and what they'll do next. The co-founder and CEO, Ariel, is based down here. I'm sure we'll have him on a future pod. So yeah, I think it's exciting to see what they'll do with it. I think a lot of it will go, I think the article mentioned they'll kind of do a lot more virtual boot camps, but it's exciting to see. Anyone want to weigh in? I mean, Auston, being a former Win coder, anything to add?
I mean, in general, the coding bootcamp space is always really great to see growing. So shout out Ariel. I haven't spoke with him, but I think I was maybe one of the first people he met in Miami. I think you know, I love you, Ariel, if you're watching this.
Do you guys think this is a signal of more investment and more activity going into like the ed tech space down here in South Florida? I mean, do we consider boot camps ed tech?
Definitely ed tech, but seeing as how, you know, they're very like distributed and global, I don't know that it's like we're going to see like a whole lot in Miami. Do they have a dev team, right? Do they have like some engineering talent that they have here that they're going to use to build this out? That's a question that I would have.
That's a good question. We'll have to ask Ariel next time when he's on, whenever we get him to squeeze some time out for us and join us on the pod. But I mean, look, I think it's a good sign that companies in Miami are able to raise $20 million, you know, because their other location or other HQ of Madrid isn't known for raising a lot of money either, you know. So the more money we can absorb into our ecosystem, the better, you know. And hopefully this turns around and Ariel and company can sell the company or go public or something in a few years and start making it rain on their own angel investments and VC investments. You know, that's the circle of startup life.
Hey, Matt, what else do you all have this week? And I think we're we covered Austin and what he's building. Definitely Citrix, Ironhack. I mean, anything else that's interesting for the good of the podcast listeners here?
Yeah, I'll throw something out. If anyone is raising money, definitely hit me up instead of other people.
Ooh, here we go. So
I like to be first check-in. So
I got called out yesterday for not giving Austin enough a shout out when someone asked who are the most active angels in Miami, and I limited my response to those who had over 20 responses. So I apologize to Austin, because Austin is well on his way to getting to the 20 mark. He's at 8 now, or 12 investments.
I'm pretty sure it's 8. I did 5 last year.
Okay.
I'm only doing 2 this year, but.
And you responded not with hey Brian, I can't believe you left me out of this. You responded with like the receipts. Like you dropped the actual like website with all of your investments, the amount of like, the convertible note amount and all that. I mean, like what can you just share for our listeners some of those investments and how they're doing right now?
Yeah, absolutely. I don't know what's public, so fuck it, whatever. I'm up a lot on a few of them. I'm marked up a bunch on my first couple, and I know I'm going to get marked up a bunch on some of the other ones. Value is literally destroying it. Lula destroying it. I'm really excited to see what Tamar at Mental Happy is going to do. I'm fully taking advantage of the Miami arbitrage. Tenably, also a super strong company. Founder extremely focused on their customers, and like as someone who has to do the same thing as every single person that I invest in, I can see when I think someone's going to succeed.
Tenably is actually going to be my first angel investment. You heard it here first.
Hey.
Awesome.
And I'm gonna put investor on my bio, just like Austin.
I don't have that on my bio.
Are you focused on any specific industries, verticals, anything? What's your thesis?
My thesis is Miami founders. That's it.
I love it. And then how do you recommend people get in touch with you?
There's a form where you can tell me about your company and I'll respond.
We have another guest on the pod. Maria's dogs are yapping.
I'm shocked it took this long for them to appear on the pod. They've been quite.
We've invited them since episode 1. We've invited them, and they've been a bit shy. Well, Austin, thank you so much for joining episode 4 of the Miami Tech Pod. To our listeners, if you haven't already, please rate and subscribe to the show on your favorite podcast app, and follow us on Twitter at Miami Tech Pod. And please share this episode with anyone who's interested in learning more about the Miami tech community. Thank you very much, and we will see you on episode 5.
See ya.